Hey everybody, it's Ethan here in Pursuit, and today we're talking about how Tesla fared going through Q1 2020, what to expect with their shareholders letter and their upcoming earnings report, and just what to look forward to here in April, and then going into May. Just to note, a lot of this is going to be really short term. Tesla is still a really solid financial company. They have a lot of demand. They're in a really secure place. They're in a better place than they've actually been since the company was founded, except for maybe like back in February, before all of this disease kicked in. But even with stock markets crashing and funding dropping and nobody going outside and revenue dropping to zero on all these companies, Tesla is still in a really secure spot, and a better spot than they've actually been in years. So long term, 5 to 10 years, outlook is pretty much the same as it was at the start of 2020, when the stock skyrocketed to over $900 a share. It's like the company's still in the same situation. Some would say actually they could be in a better situation this time next year because they're going to be hurt a lot less than their competitors. Ford, GM, Volkswagen, all those companies have high debt, and they have massive debts, and their sales are so important. Just to lose even 5% could hurt the company so much. Well, Tesla is in this place where even if they lost 20, 30, even 75% of their sales, they could still be a very strong company, and it wouldn't hurt them much at all. It would just ultimately slow it down. So instead of seeing like them produce 1 million cars by the end of 2022, maybe it's end of 2023. So, but ultimately, good spot. We're looking really good at the company. But that brings me to just how excited I am about where Tesla's stock price is now. If you take the overall markets, and I wish I had a picture of the Dow Jones market over the past 6 months. It's just up, bam, and that's the actual value of the market. But if you take that the value graph, and you flip it upside down, that's where you get the opportunity graph. So over the past 6 months, the opportunity just investing in the Dow Jones is going down and down and down because it's getting too inflated, and then it just skyrockets and it almost hits the roof with opportunity, because the lower it is, this is still an amazing country. It's still financially secure, and it's gonna be back to where it was. And nobody out there is arguing whether our country, USA, will get back to where it was. The only argument is how long that will take. Some are saying 5 years, some are saying 6 months, some are saying 2 months, right? Now, if it's 2 months, if whatever company you invest in now, as long as it's secure, as long as it doesn't go bankrupt, because that's where a few people get mixed up. They're like, oh, look at the cruise line ships. If I invest now, they're down 60, 70, I think some of them might even down 90%. From their highs 2 months ago. It's like, if I invest now, I can make a 90%. That's a 10 times return on my value. If it's 2 months, bam, 2 months, 10 times value. That's amazing. If it's 5 years, 10 times on 5 years is still a really good return. Now, when you're looking at a cruise line ship, you got to be careful because they don't pay taxes. They're not going to get bailed out. It's like the U.S. government has no incentive to bail the cruise ships out because they don't pay taxes. They like to say they're not part of the U.S. economy. They employ people from other countries. It's like the only thing they do is withdraw capital from our country. So there's very slim chance that they're actually going to get any sort of bailout. Now, they could maybe get more funding from the banks, draw out more loans. It'll put the company in a weaker position, but they could maybe hold on longer. So, but it's like, when you're looking at that, you're like, that the debate there is like, will that make it back up? But our economy as a whole will make it back to where it was. And we're down 20, I think at one point we're down 35%. So if you put all your money into the Dow Jones market, into the S&P 500, just pick one, Put it all in 5 years. I think 5 years is the longest estimate I've seen. In 5 years, you will have 35% increase on your return. That is an average of what? 5%? Yeah, 5-ish percent. No, I'm sorry. My math is so bad. 5 years, 35%. That is a really, really good return on your investment. The average across 100 years is like 7% per year. Talking about fun. I'm not going to do the math here for you. You can go look it up. But you can do even better with that. I mean, look at Tesla, right? Tesla's is fundamentally unchanged. They are still producing cars and selling cars. They're actually producing cars in China right now and selling them in China, and they're going to be everything's going to stay the same. Now, if this is out for 6 months, maybe we're set back by a year's worth of economic growth. The company is fundamentally the same, and they're down over 50%. At one point, they were down I think it was 75% down from their highs. Now, some people will argue, oh, well, Tesla was overvalued. It was a bubble. Not my perspective, but it's an argument. Fair enough point. But they're going to get back there. And if they're back there in 5 years, there is an opportunity to make 75%, it's to 3x or 4x your returns in 5 years, which is an amazing investment. And that's a great opportunity, especially for something that with so little risk. In my view, it's very, very low risk. So that is really exciting. But there are other opportunities too, like Visa. Visa dropped, Visa dropped significantly for the first time ever. And they have no competitors. They're credit cards. We all use credit cards more and more and more. Every year we use more credit cards and less cash. That's just the trend throughout the world. So even if Visa drops into second place, and right now they're the number one card processing company, if they drop to second, they're still undervalued right now than where they should be. So there's a great return, and you get a dividend with them. You can look at Square. I think Square is going to do amazing things. Apple is trying to take over Visa's share of the market. I think Square actually has a better shot at it than Apple does. They're also becoming like a central bank of the world because they can be multi-country. They can use any currency. You can even use Bitcoin and other cryptocurrencies through them. You can just deposit your check straight into there, go straight into the stock market from it. All one place, one paperwork. It's a great business. That's one of the ones I really want to get into. But got a little sidetracked there. What I want to talk to you about today is overall what to expect with Tesla. Now, if you have been following Tesla at all, if you're into it like I am, you probably listen to Tesla Daily Podcast and Hyperchange YouTube videos. It should be Friday. Tomorrow, if you're viewing this right after I posted it, maybe past tense for you, so this video is a little old, but Tesla produced X number of cars and sold X number of cars, like delivered. It only counts as delivered if it's in customers' hands, they have the keys, and their paperwork's complete, finished, in order. So we're looking at, and that is a great indicator just how well Tesla's doing financially and with demand and everything currently. So they usually come out with a letter to the shareholders on April 3rd after quarter one, and they go over a few of those numbers. So everybody right now is putting out their guesses. You see some of the so-called professional analysts coming out with saying, oh, they delivered 57,000 cars in this quarter. 57,000 cars. That's less than half that they delivered in quarter 4 2019. Now, quarter 4 2019 was their number one quarter ever. But you look at quarter 3 2019, and it was their number one. And you look at quarter 2 2019, and it was really strong. And quarter 1 2019, that was bad, but there were multiple reasons for that as the company transitioned from doing mostly S's and X's to focusing almost solely on Model 3s. But this year, 2020, quarter 1, is the first time we've ever had cars produced out of factory in Shanghai. And people are like, oh, well, if they're doing 5 cars over there per month, who cares? It doesn't affect the numbers. And people are already estimating that they're producing 3,000 cars per week. 3,000 cars per week is 12,000 cars a month. For 3 months is 36,000 cars. That's almost all the cars that this analyst is saying they delivered. Now, I'm pretty sure they started off lower. At the beginning of the quarter, they were saying 1,000 per week, and that was extrapolated out. It's like, oh, for 1 hour, they did enough. If they did that same hour every day for the whole week, continuously nonstop, they would get there. So maybe they're only producing 100 per week, but they're saying 1,000 is their capacity. I estimate that Tesla has probably produced 20 to 25,000 cars out of Shanghai and delivered probably, so if they did 25,000, they probably delivered 20,000 cars to China from their Shanghai Gigafactory. 20,000 cars plus if the Fremont factory produces 100,000 cars. Now they can do more than that. We know they can. They produced 110,000 cars last quarter. So, but let's say if every thing's fine and they produce just 100,000 cars in one quarter, that, as you might know, is 33,333 cars per month. Now, the Fremont factory here in California was open for full 2 months. That would put them at 66,000 cars without counting anything from Shanghai. But they also started producing Model Ys, and Model Ys is negligible. It's too small. I've seen estimates at about 1,500. I think anywhere between 2 and 3,000 cars. 1 and 2,000 Model Ys has probably been actually delivered. They probably produce as many 3,000, maybe a little less than that. So probably double whatever. I don't know. Let's not get into that. So my estimate is they probably produced 70,000 cars out of their Fremont factory and probably another 25,000 out of their Shanghai factory for a total of 95,000 cars, right? 95,000 cars, and they probably delivered 80 or 90% of that. So you're looking at high 80,000 high. So like almost 90,000 cars is my estimate for delivered. So like 85 to 88, which is right in line with what Sean said from, is it Sean? I'm sorry. Rob Maurer says on Tesla Daily. He's like, his estimate right now, he's guessing right around 88,000 mark for delivered. That's delivered, not produced. So right now everybody's worried more about deliveries. I think Q2 is going to be a lot different. But I think with all these so-called specialists lowballing the quarter so much, like 57,000 cars, people you start to see the stock wane. It's been pretty stable just as people wait for the shareholders report, but as it just wanes, I'm hoping it'll just drop. Anything below $400, it's like I would feel so bad if I couldn't buy at that point. Now if I started investing at $230 per share, but I only got a few shares because it's just having the savings to put into it. But being able to pick up even $450 is a great buy for this solid of a company in this economic turmoil. So I don't think people are estimating Tesla is going to lose when we get to the earnings report, end of April. I think the company is going to be worried. So I think tomorrow when they release their numbers, if it's before the stock market opens, if they do it early morning, the stock is going to shoot up. Now, if they do it after the stock market closes, end of day Friday, I think stock is just gonna tumble right off a cliff, because people are like, oh, they didn't release it in the morning. It must be terrible news. Sell. Which I think if that happens, buy. Get as many shares as you can, because that's gonna be maybe one of your last opportunities to get these numbers. It's going to shoot up. I think it's going to sit about 650 to 700, maybe a little lower. We have to remember that a lot of other companies are releasing their shareholders reports, and it could be a lot of bad news. A lot of bad news. So if the whole market if the market as a whole falls off a cliff tomorrow, Tesla is going to have trouble, even with the best news ever, saying, oh yeah, we delivered more cars than ever. It still could go down just because the economy as a whole is going down. But if other companies, I think there's a lot of people who have, I think the economy is overcorrected for how bad it's going to be. If it's just 1 month, if it's just 1 month of this, it's overcorrected. If it is 6 months, we're about right. If it's a year, it's not, we got to go down farther. But I think it's 1 month to 2 months so I think we've already overcorrected, and there's companies out there that are actually doing better. So I think we're going to see a mixed report. Some companies are like, oh, wow, I didn't realize it was so bad. But there's going to be a lot of companies out there like, oh, actually, I can live with that. That's not bad. Because there are still e-commerce going. Amazon's doing great. Online sales. Which, as you know, Tesla is part of. But all that being said, I think the stock will shoot up 650, 700 range. If the economy does drop significantly, maybe 550, 600 range is more likely. And I think as news comes out and goes, I don't think we're going to get much good news up in for the rest of the month, just because what we've been hoping for, like Battery Investor Day and all these other things, they're going to be postponed, hopefully end of May, but maybe June or July if things get really bad. So maybe not a whole lot of good news until the shareholders report, and they're going to announce massive losses. It's going to be because they're building a gigafactory in Shanghai. They're doing a lot of work over there. They're trying to build up their Model Y, production. They're also building a gigafactory in Germany, and I think they're going to try and buy. That fell out. Their Texas gigafactory, I was estimating they're going to buy the property mid-March, but with everything happening, that's probably postponed till May, June, July, just like everything else. And then they just started a new line in the Fremont factory, and I'm assuming they're doing a lot of reworking, revamping. There's a lot of extra expenses that were just all lined up in this year. I mean, in this quarter, and with Shanghai closed for two weeks, and I think the Fremont factory was closed for just about 2 weeks. They were closed, not producing anything, but still, you saw those expenses. Their gigafactory, both gigafactories in the U.S. closed, their Nevada and their New York gigafactory. So I think they're just going to have massive losses. And it's not going to do anything with like the virus. It's just Tesla has no problem spending everything they have. They will spend everything they have and more, as long as it doesn't put them in danger of the bankruptcy. Because every dollar they invest, they get a 10x return on it in a year or two. So the more Elon Musk is pushing, he's pushing the boundaries as fast as he can, and it's going to be really good for the company. But I think people are estimating losses this quarter because of the virus, but that's not why. It's because of their investments. So I think we're going to see bigger losses, even though their numbers are low. I think their number of cars is low. Number of cars delivered is low, and the losses is low in both ways. So I think we're going to see another shock to the stock price come end of April, and then from then on out, who knows? With all that's going on, it's trying to forecast what's going to happen 6 months out is too difficult right now. But 3 to 5 years is still the same. It's still the same. I hope you guys are all staying safe. I hope you're all doing okay, and have a wonderful day.